Let's do some questions on payables and accrued liabilities. On June 1st, year 2, Archer Inc. issued a purchase order to Cotton Company for a new copier machine. The machine requires 1 month to produce and is shipped FOB destination on July 1st, year 2, and is received by Archer on July 15th, year 2. Cotton issues a sales invoice dated July 2nd, year 2 for the machine. As of what date should Archer record a liability for the machine? All right, so as you've noticed, this is just a big question of what date are we going to use? What date are we going to use? Thoughts, questions, what's going through your mind? I'll give you a second to think about it. Well, if you said that we want to look at FOB destination because that would help us to determine what date we'll use, then you would be absolutely correct. FOB destination and FOB shipping point are key phrases here. And you'll see, based on this diagram, that FOB shipping point has the title transfer when the seller gives the good to the transit, whoever's bringing it to the buyer. On the opposite, FOB destination, if the terms are FOB destination, free on board, then the title transfers when the shipper delivers the goods to the buyer. And what does title transfer mean? Well, title transfer is the liability of it, the actual ownership of it. That's when it really happens, when everything is recorded, journal entries are recorded. So let's take a look. We have FOB destination. And what date makes sense here? Well, if we look, when does the title transfer? It's received by Archer on July 15th, year 2. That's when it's received by the buyer, Archer, who issued the purchase order to Cotton Company. So that's when Archer would record a liability for the machine, because now Archer has to pay for it. They haven't paid for it yet. Doesn't say anything about no cash changed hands. So yeah, we issued a purchase order, and that's all that happened. So July 15th, year 2 would be our final answer here. Now, if it was FOB shipping point, we for sure would use the July 1st, year 2, because that's when the title would transfer under FOB shipping point. Good question. So now we're looking at this next one, which is a little more math based. During the current year, Casual Wear Company had total retail sales of $800,000 and collected a 5% state sales tax on all sales. At the end of the prior year, Casual Wear had $4,500 in sales taxes that had not been remitted to the state authorities. During the current year, Casual Wear remitted $39,500 in state sales tax. What amount should be recorded in Casual Wear's current year financial statements? All right, so there's a specific type of universal formula that we will use here, and it's one of my favorites. If any of you can think of it now. Going once, going twice. Well, it's going to be the base formula, and we'll see very clearly why that would be the case. Remember, base formula has you figure out, and you could be figuring out any of these components, but as long as you have 3, you're good to go. Beginning, addition, subtraction, ending. Let's see, what's our beginning balance? We're trying to find the sales tax. So the beginning balance. Okay, so beginning balance looks like it's going to be $4,500. Why? Well, because $4,500 had not been remitted to the state authorities. They owe it. So that's their total balance beginning in this account, in the sales tax account. Next, let's figure out, well, do we need, let's see, additions would be collections of sales tax. So total retail sales of $800, collected 5%. So the additions to this account are going to be $800,000 times 5%. I'll give you a second to figure that out. All right, that is actually going to be 40,000. Next, let's look at our subtractions. Okay, well, that would probably be sales tax remitted, so sales tax given to the government. That would be, if you see here, $39,500. So remember, the account we're dealing with is the sales tax. Essentially, think of it like a bank account where you're holding all of your sales tax money that you eventually need to give to the government. So the final balance, ending balance here, can be solved by doing 4,500 plus 40 minus 39. And what do you get there? I'll give you a second. All right, so final answer is 5,000. Now let's look at the answers, because obviously there's only one 5,000 answer, but payable expense, revenue, sales tax revenue, sales revenue. What is this? Well, this is not revenue. This is essentially you are holding money owed to the government for them. Like you're doing their job for them. And let's not get started on that. But as a company, you never are going to recognize this 5% of the 800 as revenue. This belongs to the government. So it's not going to be revenue. That's why I'm going to cross off letters C and D. Expense, well, this is not an expense incurred by the company. This is, again, think of, if you've seen governmental accounting yet, think of this like the custodial fund, where you're holding funds for another entity. It's not yours. You will eventually give it to another entity. So that's why it's payable, right? Because we are going to owe it to the government. It's not ours. It's not casual wear companies. All right, those were some good questions. I hope you guys enjoyed those and they are helping you out along the way. I'll see you guys next time.